recording of all the business transactions relating to a particular person or a particular item is called as an account. Where you can't touch, you can just feel that. So that is known as what? Intangible real account. Assets, expenses or losses together, where the golden rules tells that increase in asset is debited, decrease in asset is credited. Hello everyone, I am Harshita, lecturer, Department of Commerce, Vidhyaashram First Grade College, the Temple of Excellence, Mysuru. My dear students, today we are in the first session of Unit 2 of the subject Fundamentals of Business Accounting, and this is for first sem B.B.A student. So your Unit 2 is all about accounting process. So in this unit you are going to learn about what are the accounts we are going to prepare, what are the rules to be followed, that is golden rules of each and every account. Then we will learn about journal, ledger as well as trial balance. So let us quickly begin the session. So we are going to learn about systems of accounting. So there are mainly two systems of accounting, that is double entry system as well as single entry system. So you might have heard about it. So whatever the accounting or whatever the recording we are going to make in a books of account, so it is relating to double entry system, and it is one of the most accurate system of accounting, that is double entry system. Now let us see what is this double entry system. So this system is also called as complete system of accounting. So in this system the record or it records two aspects, what is debit as well as credit of every transaction in the books of account is known as double entry system. In the sense, whenever we will record the transaction, so one transaction will be debit, that is one item will be debit, or one account will be debit and other account will be credited. So when we are recording the journal entry, for example, goods purchased by cash. So what is a journal entry? Cash account data to sales account, correct? So cash account is debited and sales account is credited. So if there is one debit, there should be a corresponding credit for that. So that is known as what? Double entry system, and this is one of the most accurate as well as complete system of accounting. The second system is that single entry system. Now what is the single entry system? Accounting records which are not strictly kept according to double entry system, they are termed as what? Single entry system. Now single entry system is also called as incomplete system of recording or incomplete system of bookkeeping, where it is not more accurate or it is not that accurate than that of double entry system. In single entry system, we will record either one debit or one credit. So here for each and every entry, there will not be a corresponding debit as well as corresponding credit. So unlike double entry system, for double entry system, there should be a corresponding credit and corresponding debit. But this will not happen in case of single entry system. So it is called as what? Incomplete system of bookkeeping or incomplete system of accounting, because here we are not going to record each and every transaction with corresponding debit as well as corresponding credit. Either one debit will be recorded or one credit will be recorded. So this is about two systems of accounting. Now let us see what is an account. So already we have learnt about it. So let us recall once again. So what is an account? So in journal or recording of the transaction takes place from journal. So in journal we will record all the transactions in a chronological order as and when it has been taken place. That is, in a sequential order we will record each and every transaction in a date wise. But that recorded transactions, what we have recorded in the journal, so it has to be classified into individual place or it has to be classified into individual account. Depending upon their nature, we are going to classify them. So that is known as what? Account. So what you have to remember, in journal we will record all the transactions in a chronological order. Now depending upon the nature, we have to classify those transactions. So that place where we are going to classify, so that is known as what? Accounts. Now, the transactions relating to purchase, all the transactions relating to purchase will be recorded in purchase account. In the same way, all the transactions relating to sales will record in sales account. All the transactions relating to cash will record or will classify in one place, which is called as account. Now let us see what is an account. An account is a record of all business transactions relating to a particular person or item. So here recording of all the business transactions relating to a particular person or a particular item is called as an account. In accounting, we keep a separate record of each individual asset, liability, expense or income. So depending upon the nature, we are going to classify these transactions. So it may be on the basis of individual or on the basis of particular asset or on liability or on expense or income. The place where such a record is maintained is termed as an account. So that classification what we are going to make depending upon the nature, so that place is called as what? Account. All accounts are divided into two sides. I'll show how this account has been divided. So it has been divided into two types. One is debit side as well as credit side. The above account resembles English capital letter T. So here the account will be in the form of the letter T. Okay, so I'll show how it is. As such, it is often called as T-shape account. So account will be in the form of letter T. An account is abbreviated as A/C. So we are not going to record or we are not going to write account as full, that is ACCOUNT. Instead, we will write in the form of A/C, that is account. So let us see what is the shape of an account. As I told you, it will be in a T shape, where we are going to write the title of the account here. Suppose I am going to prepare cash account. So all the transactions of the journal relating to cash is combined together and I have brought together, where I am going to place in a particular account, that is called as cash account. So I'll write the title of the account as cash account, and this will be debit side, so which will be indicated by DR. So this indicates debit side and the right side indicates what? Credit side, and it is denoted by the letter CR, and it will be in the form of shape T. So this is about the account. Now let us see the classification of account. So this is very important. You have to know this general aspects relating to accounting. So these are the classification of account. So the classification of accounts under English system or the traditional approach. So here the classification of accounts has been divided into two types. One is classification of accounts under English system or traditional approach. Other one is classification of accounts under American system or modern approach. So here the classification of accounts has been mainly divided into two types. One is English system or traditional approach. Other one is modern system or American approach. So let us see how the classification has been made under individual systems. Okay, now classification of accounts under English system or traditional approach, where the accounts has been divided into three types. One is real accounts, personal account as well as nominal account. So remember, under English system it has been divided into three types. One is real account, personal account as well as nominal account. So in this particular session we are going to learn about all the classification of accounts. What is their golden rules? What does it mean? What is the best example for these types of accounts? Okay, now come to the real accounts. Now what is this real accounts? Real accounts are accounts related to properties. So this you have to remember. So real accounts, so these are the accounts which are related to the properties. So here real account is being subdivided into tangible real account, intangible real account. Now what is this tangible real account? As you all know, real account means what? It is related to property. Now what is this tangible real account? So tangible means what? Which can be touched as well as seen. Okay, so those properties in an organization which can be touched as well as seen, that comes under tangible real account. So example, land. So land is an land where you can see the land, we can touch the land, correct? Building, machine, furniture, cash. So these are all what? Tangible real account, and these are the properties of the business. Next, intangible real account. So, these are the real account, or this is also a property where you can't touch. You can just feel that. So, that is known as what? Intangible real account. So, the best example is goodwill, patents, copyright, etc. Now, let us see what is the golden rule of real account. So, what does golden rule tells about real account? Debit what comes in and credit what goes out. So, what you have to debit? You have to debit what comes to the business. What you have to credit? What goes from the business. So, this you have to remember. So, this is a golden rule. Debit what comes in, credit what goes out. Okay, so hope you are clear with real account. So, remember real account means what? It is the account related to properties, where it has been divided into two types, tangible real account as well as intangible real account. Tangible real account in the sense it can be touched as well as seen. So, these are the properties of the business which can be touched as well as seen, that comes under tangible real account. Whereas intangible real account, these are also property which gives some value to the business, but we cannot touch as well as see. We can just feel that. That is known as intangible real account. Now, what is the golden rule of real account? It tells that debit what comes in, credit what goes out. Now, moving on to the next example of real account. So, as I have told you, it is all related to properties. So, these are all properties of the organization. So, it may be tangible or intangible. Now, furniture. So, it is a tangible. Next, building is a tangible asset. Furniture, no machinery, that is also tangible account. Land, tangible. Vehicle, purchasers, purchase return. Sales, sales return. Stock, loose tools account. Cash account, goodwill. So, these are intangible. Patents, intangible. Trademark, intangible. Copyright, intangible. Investment, bills receivable and bills payable. So, these are the best examples for real account. Now, coming to the next second type under English system, that is personal account. So, the second type under English system is personal account. So, let us see what is this personal account. Personal accounts are account related to the persons or institutions. So, what it is related? It is related to the persons or institutions with whom the business has dealings. Whereas real account, it's all related to the property of the business. Whereas personal account, it is related to the persons or institutions with whom the organization has its dealings. So, here the personal account has been divided into three types. One is natural personal account, artificial personal account as well as a representative personal account. Now, what is this natural personal account? So, the best example is name of the person. Okay. So, who has some individual existence and they are live. So, they are known as what? Natural person's account. For example, Rima's account. So, it is a name of a person. Next, Gagan's account, Shweta's account. So, here the name of the person is that. So, that is natural person. Artificial person means what? Which do not have life but still act as a individual. But it has an individual existence. For example, institutions. So, these institutions has a name. It has a common seal. Right? So, it acts as a human beings, but they are not, but they do not have the life. So, they are termed as artificial persons account. For example, Canara Bank account, Wipro Limited account, Sports Club account. So, these are the, with the name they are going to sustain in the market, but they don't have life. Okay. So, they are termed as artificial persons account. So, they are not human beings, but still they have individual existence. Next, representative personal account. So, these are like outstanding salary, prepaid rent, rent received in advance. So, all the outstanding and all the prepaid or pre-received. So, all these comes under representative personal account. So, example is outstanding salary, prepaid rent, or rent received in advance or anything which is received in advance. So, all these comes under representative personal account. Now, let us see what is the golden rule of personal account. So, it is that debit the receiver of the benefit and credit the giver of the benefit. So, what they are going to debit? Debit the receiver. So, it tells that, so one who is going to receive the benefit, debit that. One who is giving the benefit, credit that. So that is a golden rule of personal account. Debit the receiver of benefit and credit the giver of benefit. Now we shall see the examples for personal account. So it may be artificial person, natural person or representative person. So all these are included under this example. So Ram's account, capital account, drawings account, Sham's account, loans account, bank loan account, A's loan account, bank overdraft, bank account, syndicate bank account, ABC college account, Vidhyaashram college account, debtors account, creditors account, Ganesh medicals account, salary outstanding, prepaid rent, interest receivable, commission received in advance, commission due but not received. So these are the best examples for personal account. Now moving on to the third type under English system, that is nominal account. So nominal accounts are related to all expenses as well as incomes of the business. Whereas real account, it's all related to the properties. Personal account, it is related to the person or institutions, whereas nominal account is related to all the expenses as well as incomes of the business. So for example, commission paid, so it is an expense. Rent received, it is an income. Salary paid, so it is an expense. Interest received, it is an income. So it is all relating to income as well as expenses. Now let us see what is a golden rule of nominal account. Debit all expenses and losses, credit all incomes and gains. So what does nominal account tells that? Debit all expenses and losses. So what you are going to debit? All the expense and losses, and what you are going to credit? All the incomes as well as gains. So this is a golden rule. Now we shall see the example of nominal account. So as I told you, it's all relating to the expenses as well as income. But in accounting, you have to be careful. Suppose they have given just salary, it means that salary paid. Suppose if you have received, they will clearly mention it as salary received. Suppose they have given just interest, it means what? Interest paid. Commission received. So if they have mentioned the word received, then only we can tell that it has been received. So if you see the examples here, we have salary account, wages, electricity charges, discount, commission, stationery, printing and stationery, excise duty, bank charges, dividend received. So these are all expenses, whereas dividend received is what? Income. Postage, expense, trade expense, it is also an expense. Oil, coal as well as gas, it is an expense. Power and fuel, expense. Depreciation, expense. Profit on sale of asset. So what it is? It is an income. Loss on sale of asset, expense. Appreciation, income. Bad debts, then bad debts recovered, interest received. So all these are the best examples for nominal account. So what you have to remember, it's all related to expenses as well as incomes. Now the second classification, that is classification of accounts under American system or modern approach. So here it has been divided into 5 types, that is asset account, liability account, capital account, revenue or income account, expenses or losses account. So these are the 5 classification under American system or modern approach. So let us see one by one. So classification of accounts under American approach. So now before that we shall see what is all related to. Now asset account, it's all related to assets. Okay. In the same way liability account, it is all related to liabilities. Capital account, it's all related to the capital. Okay, next revenue as well as income, it's all related to the revenue or the income what the organization is going to receive. Next, expenses or losses, what the organization is going to pay. So these are all the classification. So here the word itself tells that what does that account means. Okay, now we shall see the golden rule. Rule of debit as well as credit under American approach or modern approach. American system or modern approach. Now for the easy classification, you can take asset as well as expense as well as losses together. Assets, expenses or losses together, where the golden rule tells that increase in asset is debited, decrease in asset is credited. So this is a golden rule of asset. increase in asset. If any asset have increased, we have to debit that. If any assets have decreased, then we have to credit that. In the same way, the same golden rule is applied for expenses also. Increase in expenses or losses is debited. Decrease in expenses or losses should be credited. Okay, so this is related to expenses or losses. Now, the other three classification can be taken together: liability, capital and revenue. So here it will be reverse. Increase in liability is credited. Okay, so if any liability have increased, we have to credit that. Decrease in liability has to be debited. So decrease in liability has to be debited. In the same way, for capital also, increase in capital is credited, decrease in capital is debited. And increase in revenue or gain has to be credited and decrease in revenue or gain has to be debited. So for this, for easy remembrance, what you have to do, just remember A and E, that is assets and expenses. So if assets and expenses have increased, we have to debit. If assets and expenses have decreased, we have to credit. Other than that, all the liability, capital as well as revenue or gain, if it has increased, we have to credit. If it has decreased, we have to debit. So these are the golden rules under American system. Now we shall see individually what are the examples for assets. Assets, liability, capital, revenue or gain, expenses or losses. So you are familiar about it. So these are the examples for assets. So what are the example? Building account, furniture account, premises account, computer account, land account, vehicle account, stock account, investment account, patents account, bills receivable account. So here the assets may be current assets or non-current assets. So both are combined. Bank account, cash account, prepaid insurance, interest receivable, that is outstanding interest, then that is interest receivable. Outstanding income, goodwill, debtors, loose tools, copyrights, loan to A, motor car. So these are the examples for assets account. Now coming to the liabilities. So you know about the liabilities: creditors, bank loan, bills payable, that is the amount that has to be paid to the outsiders, bank overdraft, outstanding expenses, income received in advance, loan account, rent payable, that is outstanding expenses, loan from B, outstanding salary. So these are the examples for liabilities. Now the examples for capital, we have capital account and drawings account. Next for revenue, in the sense whatever the organization is going to receive or received, commission received, rent received, interest received, discount received, dividend received, sales. So by selling the goods, we will receive the amount. So sales is also comes under revenue. Sales return and other receipts, that is anything which is being received by the organization. Next for expenses, so there are a lot of example here like wages, carriage, cartage, freight, manufacturing expenses, trade expenses, salary, rent, commission, interest, bank charges. So as I told you, if nothing they have given, just given the charges like interest, it means what? It is been paid. In the same way purchases. So while purchasing, we are giving the amount, so it is a expense. Purchase return, discount allowed, printing and stationery, telephone charges, travelling expenses, advertisement, bad debts, depreciation, loss of goods by fire, loss of goods by theft. So these are the best example for expenses or losses. So hope you are clear with all the classification of accounts under both English system as well as American system, and we have seen the golden rules along with the examples. So in my next session we shall continue with journal entries. So we have learnt what are the classification of accounts and what are their golden rules. So we shall start with recording of transaction, that is from the book of original entry, which is called as what? Journal. So let us see what is this journal, what are its features, and we shall solve a problem on journal entries. So my dear students, you might get a question on journal entries for 15 marks. So hope you have understood today's session. See you all in my next session with a new topic. Till then, take care. Thank you.